Yo, what's up, everybody? It is Tuesday, September 5th. We are into September. This is the last month of the fiscal year 2023. Well, Friday had a huge transfer day, positive flows. Friday, of course, was the 1st of September. That's when we get all the big transfers like Medicare, Medicaid, military pay, veterans benefits, disability, all that stuff. And it was a 127 billion leading flow day. That's the biggest that we have seen all fiscal year for a first of the month transfer. And it was like a 95 billion net. So after taxes, 95 billion. So a huge, huge day. And it helped to boost up, I keep an average, a 10-day average of these flows. And I've been telling you guys that, the average has been trending down. As a matter of fact, recently it hit the lowest level in at least 2 years. Like I've been tracking this for 2 years, and it hit the lowest level of, the 10-day average hit like a 17 billion, and that was the lowest level in at least 2 years since I've been tracking this thing. And I advised you guys about this. I said it's going to be negative for the market. But Friday's flow boosted it up, but not really enough. And that's it. I mean, that's it for September. Yeah, we got some Social Security payments coming through, and that'll help mitigate the deceleration in these flows. But again, this is why we're coming into what is seasonally like the worst period for the stock market. I saw some guy on YouTube the other day talking about how September is the worst period for stocks, and he did a whole YouTube video on it, but never touched on the fact that this is a seasonal thing because of these tax drains. We have a tax drain coming up on September 15th. That's next Friday. And the flows, that's it. And then we're coming into the end of the fiscal year where Congress has got to come up with at least a continuing resolution. Otherwise, there's a government shutdown, and they're not going to come up with a budget. But this has been the thing recently, operating the government under these continuing resolutions, which are they could be like a month or 2 months in duration. I mean, it's really mismanagement, but hey, what else is new? Somebody asked me, how come, Mike, if Friday was such a big day, why was the market down? I tend to think that these flows are anticipated. People know they're going to get these payments, and so the economy reflects that in consumption and investment. So we tend to see these peaks and troughs before they actually happen. And so that's about the best explanation I can give on this. But again, I'm just saying that despite Friday's record, at least for the fiscal year, transfer, it's not enough. And the point is, or the key point is, what is the trend? I mean, if the trend were rising, like it was from March into basically July, I would say, hey man, you got to buy this dip today. But the trend is not rising. And as a matter of fact, I sent out an email to my subscribers early this morning because the market was up, NASDAQ was up. I said, this is not going to last. And Dow was quickly lower, and NASDAQ was kind of resilient most of the day, but I said, that's not going to last either. And some other things worth mentioning. Today, OPEC, Saudi and Russia said they were going to extend their production cuts, and that boosted crude, but oil's not going to stay up here if equities go down. And it's not just about following equities. It's, again, about these flows. I've told you guys so many times that these flows are the first derivative of all economic activity. It is the core of everything. Everything is, leverages off of that. But this is the first derivative. I mean, all this stuff that these other mainstream economists look at when they look at unemployment, I mean, I tell you guys in advance what the trend of these government releases are going to be, just based on the analysis of the flows. I mean, I don't know what else I could say, because I've given you guys like exactly what's going to happen. And not that, again, I'm not trying to pat myself on the back at all. It's all up to you. I'm just saying, like, this is the first derivative. This is the core of everything. And you simply have to be aware of what these flows look like, and then you have a very, very solid understanding of the macro picture going forward. See, that's the key thing. That is the key thing. I mean, it's like, there's an old saying, it's not even, I mean, I've said it a million times, you can't drive your car looking in the rear view mirror, but that's what 100% of mainstream economists, that's what they do. I mean, they're looking at these data releases from a month ago or a quarter or last year even, and they're saying, oh yeah, we're gonna go this way. It's impossible to use that analysis to any degree of effectiveness. I mean, you're looking in the past and then somehow trying to rationalize that is telling you what's going to happen. I mean, it's not. It's simple. It's simply not going to tell you. But what I'm giving you, these flows, and remember, I get this every single day. And you could have this it's not just me, like I have some secret place that I go where I see and nobody else knows it. No, this is the daily treasury statement. I have a course for $99 on my website, pitbulleconomics.com, understanding the daily treasury statement. I show you how to parse through these numbers on a daily basis. And this gives you the roadmap. How many times have I used the analogy of the mariner, the sailor out on the open seas, who has charts of what's ahead, okay? Yeah, the charts show where he's been, but it also shows what's ahead in terms of sandbars, in terms of reefs, in terms of open ocean. He also, in the old days, well, now they have GPS, but I mean, in the old days, they had a sextant, which they were able to find their way using the stars. I mean, it's basically what I'm telling you is that the information I'm giving you, which comes right off the daily treasury statement, which is a free resource that the government puts out every day at 4 o'clock Eastern time. If you know how to look at that thing, if you know how to decipher that thing, if you know how to make a few easy calculations, which are basically arithmetic, it's addition and subtraction. I keep it on a spreadsheet. It's very easy. I just pop in the numbers and boom, it just spits out everything for me every day. I mean, you don't have to do it. Nobody's forcing you to do it. You could use your charts. You could use tea leaves. You could use astrology. I don't care. I don't care. I hope what I'm telling you makes sense. I hope you're learning from this, and I hope you see that the information I'm giving you, it plays out exactly as I said. Oh, now we have some new noises. They're trimming the bushes, I guess, downstairs. So anyway, next week we got the quarterly corporate tax payment drain. Let's call it a drain. Then we have Congress has to come up with a continuing resolution by September 30th. Otherwise, October we go into a government shutdown. And we have another drain, which is individual income taxes due October 15th for those who filed extensions. Even though you file an extension, you're supposed to pay on April 15th, but you have some leeway. You can do that on October 15th. Then we get into November, where we're going to get another quarterly interest payment. November is when everything's going to bottom out. But then in December, we have another quarterly corporate tax drain. And it doesn't really bottom out until the end of December and going into January. So we have a period now where we're going to go down. We're going to stabilize in mid-November. We're going to head up a little bit, a little bit. Then we're going to go back down in mid-December. And by the end of the year, we'll be rallying again. And again, let me just give you the big picture. The big picture is bullish. I mean, we're still looking at very, very significant monthly spending flows. I don't know what's going to happen with the continuing resolution. The GOP, Republicans might demand some cuts, but like I've been saying, the big five of spending, that's all non-discretionary. Well, not all. I mean, defense is not non-discretionary, but it's always treated as if it's non-discretionary by Congress. That's completely bipartisan. Whenever the Department of Defense wants a raise, both the Democrats and the Republicans say, yeah, no problem. They quickly done, like boom, boom, boom. But everything else, if you want infrastructure repair, if you want food stamps, if you want, you name it, there's no money for that stuff. So anyway, that's it for today. All the holidays are over. The summer's finished, unfortunately. Although now I live here in Southern California, which is like 80% of the year it's summer anyway, so I'm happy about that. You guys know I was in New York last week, and I don't know, man. I'm happy to be out here now. So that's it for today, folks. Don't forget, go to my website, pitbulleconomics.com. You should really sign up for a 30-day free trial of MMT Trader. I mean, there's a lot of stuff I put out during the day on emails. And also, you should get that Understanding the Daily Treasury Statement. If you want to learn how to look at that resource, it's a free resource put out by the government. Nobody, believe me, folks, nobody in the mainstream economics profession looks at that. You could be a total novice at this, and if you understand that, you are already light years ahead of these fancy economists with their fancy degrees, and you'll be able to run circles around them. And if you know that, and if you have my report, you'll be able to run double, triple, quadruple circles around them. All right, have a good one. See you tomorrow. Bye.